Right now, global markets are in a tailspin, reacting to a rapid sequence of geopolitical and domestic shocks. Yesterday, the Dow Jones shed nearly 800 points in a single session. The S&P 500 recorded its longest losing streak in 4 years, and the tech-heavy Nasdaq took a massive hit. Institutional investors are moving their capital. We are seeing a massive flight to traditional physical assets, pushing gold past $4,500 an ounce. Digital assets are not providing the same cover. Bitcoin dropped below $66,000, shedding more than 4.5% of its value almost instantly. This correction deviates from standard economic cycles, suggesting investors are beginning to question the underlying stability of the American financial system. The U.S. Treasury recently announced a major structural change to the physical printing of American currency. Breaking decades of established tradition, Donald Trump's signature will replace the Treasury Secretary's name on all newly printed bills. Proponents view this as a projection of American strength, while critics argue it politicizes a historically nonpartisan institution. The U.S. dollar operates on fiat credibility. Its high value and status as the global reserve currency rely entirely on international trust in the strict independence and stability of American institutions. By tying the physical currency to a specific political figure, the U.S. is testing the limits of that international trust at a moment when global markets are highly vulnerable. That vulnerability is being actively compounded overseas. The conflict between Iran and Israel has escalated into a broader regional war. Israel launched direct airstrikes deep inside Iranian territory, hitting targets around Tehran and striking critical energy infrastructure. Iran retaliated, firing missiles across neighboring Gulf states, Qatar, Saudi Arabia, Kuwait, and the UAE. This creates an immediate choke point crisis at the Strait of Hormuz, where 20% of the world's total oil supply must pass through a single maritime bottleneck. With active military engagements threatening this exact supply line, global energy markets are panicking and oil prices are surging upward. Every missile fired in this theater registers directly on Wall Street. A regional military conflict is triggering an immediate global economic shock. While these international crises compound, the U.S. government is struggling to function domestically. House Republicans recently rejected the funding bill for the Department of Homeland Security. That legislative failure has extended the ongoing partial government shutdown. Federal employees, including TSA agents, are currently required to work without pay and forced to remain on duty. This internal dysfunction is causing massive logistical failures across the country, with major airports reporting security delays stretching up to 4 hours. When Washington cannot pass basic funding legislation to keep its own infrastructure running, institutional investors lose confidence in the nation's broader financial management. A steep market correction, a politicized currency, gridlocked domestic politics, an expanding Middle East war. Global money is panicking because the underlying foundation of American trust is showing deep fractures.